Hey, so you know how the AI world just cannot seem to catch a break from surprises lately? Well, here we go again, because Nvidia just took a little hit in the stock market, and this time the culprit is a name you might already recognize from earlier this year, DeepSeek. So let's break this down in a way that actually makes sense. Nvidia shares edged lower after a report surfaced suggesting that DeepSeek, the Chinese AI startup that already shook the tech world once before, is now working on developing its very own in-house AI chip. And yeah, that might sound like one sentence of news, but trust me, the implications here are actually massive. First, let's remember who DeepSeek is, because context matters here. This is the company that earlier in 2025 dropped an AI model that genuinely rattled Silicon Valley. They came out of nowhere, built an incredibly capable AI system, and did it at a fraction of the cost that American companies were spending. That single moment wiped out something like $600 billion from Nvidia's market cap in a single day. So when DeepSeek's name pops up again in a headline, investors are not just going to shrug their shoulders. They are going to pay very close attention. Now, the new report is saying that DeepSeek is actively developing its own artificial intelligence chip in-house. Think about what that means for a second. Right now, companies all over the world, including the biggest names in tech, rely heavily on Nvidia's GPUs to train and run their AI models. Nvidia has basically been the arms dealer of the AI race. Everybody needs their hardware, which is exactly why their stock has been on such an incredible run over the past couple of years. But if a company like DeepSeek starts building its own chips, that is one less customer in the pipeline. And if DeepSeek succeeds, it could inspire other companies to do the same thing. This is actually a trend that has been quietly building for a while. Google has its own TPUs, Amazon has its Trainium chips, and Apple designs its own silicon too. The big players have been slowly trying to reduce their dependence on Nvidia for exactly this reason. But DeepSeek doing it feels different, partly because of their reputation for doing more with less. If they can build a competitive AI chip the same way they built a competitive AI model, on a tight budget and with scrappy efficiency, that is a real threat to Nvidia's dominance. Now, to be fair, the shares only edged lower, which tells you the market is not in full panic mode about this. Investors have seen enough Nvidia resilience to know that one report about a rival developing chips does not mean the company is suddenly in trouble. Developing a cutting-edge AI chip from scratch is genuinely hard. It takes years, billions of dollars, and incredibly specialized engineering talent. So there is plenty of reason to think DeepSeek faces a long uphill road before they could realistically challenge Nvidia at scale. But here is the thing: the market is not just trading on what is happening today. It is trading on narratives, on what the future might look like, and on risk. And every time a new player signals that they want to cut Nvidia out of the equation, that is a data point investors have to weigh. So we are watching a fascinating chess match play out in real time. DeepSeek already proved once that they could disrupt expectations in a big way. Now they are apparently making a move that could challenge the very foundation of Nvidia's business model. The real question is, are we watching the beginning of the end of Nvidia's AI chip monopoly? Or is this just another speed bump on the road to their continued dominance?